Hey everyone, and welcome to the PivotBoss Closing Report for March 2nd, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the recent session. Taking a look at the ES here, what you see is we were looking for price to form a narrow trading range. That's what we were looking for. For the most part, we had a significant expansion the previous session, 180+% of ADR. It bounced right off of our bull last-ditch effort, 1921s, and that led to a huge squeeze to the upside. From there, we had a very wide pivot range. We were looking for the market to basically form or some sort of trading range, or at least digest the recent move on highs. Today, that is exactly what happened. Only 53% of average daily range over a 10-day basis, and that's exactly what we expected here. I also mentioned that any pullbacks, even as deep as 1950 half, but as shallow as 56s or anything of that nature could offer an opportunity to buy a little lower for a shot at slingshotting this thing into the secondary weekly target at 2004 with another key level at 2007. So there is definitely more upside potential here if prices can hold above the recent key zone here of about 65 half. Now, if we look at the weekly pivots here, I'll bring them up. One thing you'll notice here is that price has pushed off the pivot range and rallied, and then it pulled back right into the previous week's high, 1968.75. That was one thing we were talking about. If price pulls back into 68.75, that could be a buying opportunity. Price came into that zone and closed near highs. Now we could be looking at further expansion through the 89.25 R1 pivot and into the 2009.75 R2 pivot, which is the 50% expansion of the previous week's range. So we could be looking at further strength ahead as long as price remains above that previous week's high. Now, if we take a look at the intraday time frame, you can see today was mostly about trading range activity. And what we talked about early on was fading new highs or new lows. And so the first opportunity came right here to fade right into the previous week's high, and that brought us back to value. New lows down here also faded for various winning trades here, and basically what that happened after we rallied into these recent highs here, price pulled back, and then this is when things started to turn here. We started to see some rounded bottom type of behavior here where we had kind of that low that came in, and then all of a sudden it was higher lows, and now all of a sudden higher lows, especially off the open price, were being defended for a squeeze, and then we closed the session on high. So this is very important how this played out. It all held on the previous week's high. The expectation would be for a continuation again into the weekly upside key levels, and we have 89.25, 2004, and 2009 as the next key upside targets. All right, taking a look at crude oil. Crude oil continues to test the upper edge of this key range up here, or the midpoint of the key range, but the upper edge of the balanced profile here, which is basically into 34.70 up to about 35s. We saw price come into about 35.10 today. Major buy imbalance at that level when offered, and then we saw a significant drop back toward value at that point. Price eventually closed above the previous week's high though, and that's important here because that's the level we've been seeing a lot of trade around. We also see price holding as support off of composite VPOC 33.44, and that's what I was talking about before, watching this range around 33.44, 34.70. Eventually expansion out of that range could spark the next key move, but we also know that price is generally kind of heavy, top heavy in this zone. We've already seen rejections off of this area over the last couple of months, and if price cannot see any acceptance beyond this 35.25, we could be looking at another rotation back downward. This is going to be the key level to watch. Remember, we have a nice balanced range here, and if price cannot find acceptance above the value high, we could be looking at a push into value and then back to the bottom of value. So right now there's a lot of things to watch out for. Holding above this zone would suggest a push higher and a retest into some upside targets with 35.48 and 36.53 as the weekly upside targets to follow. All right, taking a look at the intraday time frame. A big time move this morning and a push higher. We saw a major rally off of our key range that we had developed, this key range right here. We put that on in the trading room and helped us identify the rejection back down. Eventually, price rotated off the bottom of that range through the top and rallied into the 100% expansion target at 35.03. Shortly after, price got a huge buying bounce on these highs. The retest went offered perfectly as we drew it up in the trading room, and then this thing sold off back to value. So this is important here. This 35.10, you can see the big spike on the profile here. 35.10 is going to be very important. Acceptance above that zone will target 35.72 and 35.93. Failure to see any traction above 35.10 would open up a retest of 5-day VPOC at 33.84. Taking a look at gold here, gold continues to look about the same, mostly just chopping around VPOC. You can see this profile has begun to take some good shape here, and we've almost got a consensus of value toward the center point of that range. You're seeing a lot of back and forth action around there, and that's what you would expect. Really, there's no edge in this zone until we get outside of the range being above 12.55s and also below 12.10s. Outside of that range is when you're going to start to get some traction. Until then, a lot of chop. You might want to stay away, but we still continue to be poised higher. You can see the trigger zone continues to be defended and bid by bulls within this uptrending market. But failure to hold above 12.20 could open up a short-term rotation back towards support, 11.91.5. That could be another buying zone for bulls, but right now, not a lot of edge. We got to let it shake out. Looking at the NQ here, a solid push higher in the previous session, very similar to the ES. We mentioned that we wanted to see some sort of trading range day today, and the expectations would be to fade new lows, fade new highs, whichever one we see, back to value, and that's pretty much that's the strategy that worked out nicely today. We saw basically 61.7% of average daily range on this session, and that tells you again a compressed state. That implies we could be looking at expansion ahead. We have 42.87 here. A test of this zone could offer a buy opportunity for a move into 4400. There's an HVN here between 4400 and 4420. That's a zone right there to target if you're a bull. Any failure to hold above that zone likely leads to a rotation back toward 41.91. Looking at the intraday chart for the NQ, this one here again, we saw how price rejected here off the 25% level and pushed downward. And early on in the trading room, we talked about fading any new lows. So we got the new low here, and we saw a price bounced off of our key level. That was an opportunity to return to value. Again, another new low here, faded back to value. Another new low here, faded back up. Didn't quite get to value on that test. The double bottom did, and basically the strategy pretty much worked out nicely on a day like today. Now what you want to see is how does price respond off of 42.93? That's the previous week's high. Any defense of that area, because it still didn't get it, any defense of this zone could still offer an opportunity to defend on a swing basis for a push higher. Failure to maintain acceptance above that level pushes price back down toward the previous week's close, which is a little bit lower here at 42.29. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.